This week, Ben and I are going to talk about inflationary measuring sticks, along with a bill that was reintroduced that could support year-round E15 sales. Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going over there in chilly Missouri?
Yeah, it is cool today. We got some snow. I think all of us expected it to come in this afternoon, and it hit this morning. So the ground's covered, and kids are making it to class, albeit slower than normal, just because it's kind of a little slick outside. But we're doing great.
Yeah, I have friends kind of dotted along the I-70 corridor there from Ohio all the way over, through Missouri and, others up into Nebraska. And it's funny because temperature-wise, they're like, it's ranging from about 15 or 20, I guess, to negative 20, depending on where you're at over these last couple of days. And I'm like, don't worry, guys, it's chilly where I am too. It got down to the 40s yesterday. So it's
That is cold for you all.
exactly. I'm sorry. The problem is I've gotten used to the warmth, and so now when it dips below 40, it does feel cold.
Yeah,
So
yeah.
it's kind of funny how that works, I guess.
Yeah, it is cold, and certainly the snow's bringing some moisture that we needed, and with the cold air coming, the snow will help insulate the winter wheat too. So
There you go.
not
Well,
complaining.
talking about some snowfall and looking at some prices that dipped over the last week. Not too many of them. Most were actually slightly higher, around flat. Giving a quick rundown on the prices. March corn futures looking at 9 cents higher at 4.96. December corn up 7 cents at 4.73. Looking at that March soybean contract down 13 cents at 10.36. November beans down about 5 cents at 10.52. Soybean oil on a cents per pound basis for March about flat at 46.07. Soybean meal by the short ton for March down $5.50 at 295.90. March wheat was up 18 cents at $6. July wheat up 19 cents at 6.25. That March cotton contract up 1.48 cents a pound at 67.11. Cotton for December up 0.78 at 69.39. And then that West Texas Intermediate crude oil contract down 26 cents a barrel at $70.74. So, Ben, a lot of kind of sideways movement, some downward adjustments for much of the soybean complex there. What's your main takeaway as you looked at the adjustments from last week?
Yeah, so I'll pick on corn here for just a second. So I've been watching that old crop corn market pretty closely. I've got a bet and a wager with a good friend about if we'll exceed $5 old crop corn or not. My my opinion is that we will get above $5, or that we could pop above it here for just a bit. And so I've been watching. We have a little bit of resistance. The market's kind of been hesitant to move above $5. We have another level of resistance, not too much higher than that, like I think in the 506, 507 range. And so I don't think we're going to shoot higher all of a sudden, but I certainly thought we could get above $5. So we've been hanging on there. And then certainly in that old crop corn market, we're up to 473 in the futures market. You take some basis off of that, and we're getting really close to I think some profitable levels for new crop corn as well here. And so maybe some buying opportunity or some selling opportunities for producers out there in that old crop market, just to get some sales on the board and get started before the market really turns and starts thinking about potentially large corn acres here in the United States this summer. So it's nice to see maybe an opportunity to get some profitable sales on the board.
Ben, I feel like we need to bring a psychologist on to one of our episodes just talking about the psychology of the markets, because sometimes, I think it's interesting to see how certain marks like corn hitting $5, there becomes almost an imaginary barrier to where corn wants to stay about flat right there whenever it might be able to easily gain from, 480 to 490. It always seems to want to get stuck on certain benchmarks, and that's kind of throughout the market. But that's just kind of an interesting thing that I kind of think about. But looking elsewhere to actual news items that we're going to be looking at this week, number one, inflationary indices came in higher than expected. So looking at things like the consumer price index, it was up above expectations. So we're seeing that inflationary impact still hover higher than where like the Federal Reserve would like to see it. So, Ben, how much of an impact does this have on the overall market, and then how does that trickle into agriculture?
Sure. So The consumer price index is kind of a broad measure of inflation. I think a lot of people use that as their inflationary measure just because it's what all of us as consumers kind of follow, right? And it's based on a basket of goods, and so there's both goods and services, and I should say it's a basket of goods and services, but there's goods and services. And of course, during 2 years ago when prices were really increasing fast, the consumer index was saying that we were at like 7 to 8% in inflation, and producers and consumers alike were coming up to me saying, I don't believe that because XYZ products up 20% year over year or whatever. And so you do have some of these things that get averaged together, so it hides some of the individual product categories. But the reason that I like following the consumer price index is we found, or at least there's some evidence to suggest that commodities also follow kind of the long range gauge of inflation. And so if you see a period where inflation is starting to heat up, we tend to see commodities follow that as traders, as investment firms kind of use the basket of commodities as a hedge against inflation.
Yeah.
And so, I think as I look at this and we see the consumer price index, this is the third straight month where it's come in higher than expected. And I certainly think, the sentiment is changing to where even, consumers and market participants are expecting, annual inflation to be higher than where they expected just a couple of months ago. I think that could be bullish and supportive to the commodity markets for a period of time, just as people rebalance and use commodities as a hedge against inflation.
Well, Ben, just on that, talking about, hedging against inflation, I think a lot of times we'll see this in the general economy, or we're looking at different, I guess markets, and you see that things are, inflating and adjusting. And, I think a lot of traders rely on those tangible items to be those hedges. You look at land prices and, moving assets into maybe land investment as a way to hedge against the dollar inflation. And I think a lot of commodity crops might kind of fall underneath that category too. I don't know if you'd agree with that.
Yeah, yes and no. I mean, I think broadly, as a kind of a grains and oils sector, it's widely traded on the futures market, so it's easy to be able to participate in that market. Land's a little harder, right? There's no futures market for land, and so it seems like the commodity markets, have a little bit more ebbs and flows. It's easier to get in and out of relative to land, and in some ways, that's why land has always been relatively stable, is because it's hard to get in and out of. So. That would just be kind of the remarks I have. I think broadly, though, as I sit here and say, if the expectation, which, as that's been my expectation for a while, that we'd see inflation kind of, rear its head again here in the beginning of 2025, that's supportive to higher commodity prices. That's kind of a bullish picture of commodity prices.
Well, Ben, flipping gears into maybe some fuel and roadway items. There's been a U.S. Senate bill looking at not reestablishing, but once again, a U.S. Senate bill that would bring year-round E15 sales. What type of opportunity does this give to that the ethanol market, especially, and kind of market does it open up for corn?
Sure. So right now there's a ban on using higher blends of ethanol in fuel in the summer months. That's been in place for a long time, and it stems from kind of the volatility of the fuel itself. And so Midwest states have been trying to get a year-round approval to sell E15, and a group of attorney generals and governors in the Midwest were successful in basically getting a exemption to that for Midwest states. Now that's been in holding pattern for a while, and as of right now, we're still not even sure if we're going to have year-round E15 available in the Midwest, even though it's, like I said, it was supposed to take effect starting last summer even, but just hasn't yet. It's been kind of delayed for different things. This bill has been introduced multiple times, it's been introduced a couple of times to be a nationwide approval to sell E15 year round. And I think, to answer your question directly, what does this mean to the market? Well, this provides more stability for gasoline providers to be able to have the infrastructure and the pumps in place. If you're only allowed to sell it so many months out of the year, it doesn't really incentivize you as
I spend tens of thousands of dollars to build pumps and build infrastructure for it then.
Sure.
Yeah.
Sure. That's right. Yeah.
All right. Well, Ben, kind of keeping this week a little tightened up. What moving forward should farmers and ranchers be paying attention to that could move the market?
Well, we have a quieter week this week. I feel like we've had some busy weeks here coming up. So this is a quieter week for our livestock friends. Cattle on Feed report on Friday, February 21st. And then next week we get back to kind of a regular week of reports. So we don't have a holiday, so we kind of get back to a regular week. Consumer confidence comes out next Tuesday, the 25th, and that'll be kind of the only thing out of the ordinary for us. So getting back to a normal week with a little bit less data coming at us.
All right. Well, viewers and listeners, if you'd like to learn more about us and what we do, or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, it's always a pleasure having your knowledge and information here on the program. Again, I'm Will Robinson on Brownfield.